So what's the story with the 2021 housing bubble? Well, that's what I'm going to cover in today's video. Hey there everyone, Blaine Cruse, real estate expert advisor and the most electrifying man in real estate. Don't forget to subscribe to the channel, like this video, and share it with anyone you think might benefit from this information. With that said, let's get this rig rolling. When talking about the 2021 housing bubble, the first thing you need to understand is that it in fact is not a bubble at all. This isn't anything like 2008. Well, if it isn't a bubble, what is it? Right now we're experiencing what's called an extreme market. And don't worry, I'm going to go ahead and go into further details of how that is different than a bubble. Don't get me wrong though, neither are sustainable, but the cause and effects they have are different. So in 2008, the bubble we saw was a result of greed in the mortgage industry. There was this push to create mortgage approvals and generate loans for people who should not have been approved in the first place. Either they were approved for more money than they should have been, or they were approved when really they shouldn't have been approved at all. Right now, the market is a result of increased demand. We're seeing the increased demand because we have some historically low interest rates. These low interest rates increase the affordability for buyers. They have this increased purchasing power because they can afford higher priced homes, and they want to take advantage of that. We also have extremely low inventory right now. After the 2008 crash, demand for homes dropped. As a result, builders slowed down or stopped altogether, with some even going out of business. So for several years, we saw a decline in production, resulting in fewer homes which would normally be available now in the resale market. Also, with this increased demand, builders cannot keep up. Some builders who normally take 4 to 6 months to build are taking up to a year. The 2008 bubble ended up popping because these buyers who were put into homes they could not afford, and they ended up defaulting. So these defaults resulted in foreclosure and short sale homes flooding the market, causing prices to nosedive for years. Now, an extreme market will not pop, but it will correct. This market correction is going to strictly be driven by the market. The demand we see now is organic growth. Home buyers want to buy, home sellers want to sell, and the prices are driven by what buyers are willing to pay and what the prices the sellers are willing to sell at. This is all the natural laws of economics and capitalism. So when you have high demand with a lower supply, you're going to see home prices rise. So we are seeing the market drive the prices, and then when demand decreases or supply increases, we will see those prices adjust accordingly. The prices we see are just today's market value. With interest rate at these lows, the only place they can go is up. When they increase, affordability will decrease because buyers will not have as much purchasing power. This will cut demand. As demand decreases, we will start seeing homes on the market longer, and as they sit there and more homes get added, inventory increases. This will cause the market to adjust values, allowing it to correct. Now, are you concerned about home affordability? Leave a comment below and let me know what you think. Now, if you want to discuss the current market or talk about buying or selling and what that might look for you in today's market, don't hesitate to reach out. I'm always happy to have a chat. You can go to my digital business card at blainecruse.pro and find out all the ways you can connect with me and choose whatever works best for you. Until then, I'll see you down in the comment section, and remember, with Blaine Cruse, extraordinary comes standard. Take care.